Hello, everyone. I accidentally put the Zoom call for 9:30, even though it was supposed to be 10. So I'm going to go ahead and hang out here for 30 minutes. We will not start for another 30 minutes, but I'm going to go ahead and pop it up for you guys. It's supposed to be for 10, but I think I accidentally clicked the Zoom for 9:30, so I do apologize. So just bear with me over the next 30 minutes. I'm going to just be kind of getting ready for the call. If you guys have any questions, if you hop on early, you guys can ask away. Victor, Sebastian, how are you guys doing? Everyone's doing good. Alright, I gotta go get something. I'll be right back. I'm doing good, guys. I'm doing good. I know I took 2 weeks off. Just been getting my mind right, getting my life where it needs to be before I go into a big 2 months of trading. Why do you prefer June and July to trade? A lot of times it's the start of the directional move of the year. Um, Bigger daily candles, daily range is expanded more than usual. You're getting out of that first quarter of the year where a lot of it is, accumulation, manipulation. You're starting to get into the distribution of orders throughout the entire year. Um, so yeah, just June and July price action is usually the cleanest. Touch and go, things aren't hanging around as much. Yes, there's consolidative days, but for the most part, price action is very clean on where it wants to deliver or redeliver. It doesn't usually take too much time. When it hits an area, it touches it, it's sensitive to it, and it goes. Yes, higher time frame AMD. And that's why today we'll talk about quarterly shifts and not just quarterly shifts, but quarter theory in general, from higher time frames down to lower time frames, all of it. but I am excited to be back. I have been watching the charts. I just wanted, before I get into these next 2 months, I wanted a week for myself to get my daily routine down. Trading is something where you can be as good as you can be in this stuff, but you have to get your mental state right, and the only way to get your mental state right is to get your life in order. And not to say that my life wasn't in order, but there's just a lot that goes into it, and you know, uh, just kind of dialing back into my Zen mode, my monk mode, um, getting everything ready, mind, body, spirit, all that stuff. Um, you know, when I know that I'm approaching potentially you know, the best 2 months of the year to trade, I want to make sure that myself, uh, I don't want to just because it's the best time to trade doesn't mean it's easy, right? It's just if you're on par with what you need to be and you're dialed in, you're able to, make the most out of it. And that's really what that's really what I want to do. And so, um, over this past week, I've just been kind of getting myself in order, kind of put Twitter to the side, because at the end of the day, yes, I want to help, and yes, I want to be, um, yes, I want to, you know, help and encourage people to do good, but I always have to think about myself first. Monk mode routine, usually it lasts for as long as I'm trading, right? It's usually it'll be that 2 month period. And like I said, I'm a kid. I'm 23 years old. I love to have fun. I I love to go out and do fun things with my friends, whether that's it could be all sorts of things, right? I'm a young kid and I like to have fun, and I know that I'm only going to be this young once, so I do make sure that there's a balance in everything, and sometimes I'm on the balance side of out having fun with my friends, partying, making memories, and then there's also another balance side of dialing in and doing what I feel like I'm supposed to do. And my monk mode routine is usually I'll wake up 5 6 a.m. Um, I first thing I do is stretch. I'll sit there and do about 5 10 minutes of meditation. Then I'll get up. I'll go to the shower, or I'll go take a shower. Depends on if I'm working out in the morning or afternoon that night, because my schedule is so crazy. Sometimes I'm working out in the afternoon. Sometimes I'm working out in the morning. If I work out in the morning, I'll wake up, meditate, pray, go to the gym, cold plunge, come back, shower, and then I'll come back to my house. I'll make some breakfast, make a protein shake, come up here, look at the charts, just see where we're moving, go into work around 7:30. Take that 7 to 7:30 hour, do what I need to get my first half of my workday kind of ahead of the game. So come 8:30, 9:30, I'm not as busy. Anything can happen at work, so sometimes even if I do plan all that stuff, I get sidetracked that I can't necessarily take a trade, but I try to prepare myself as much as I can, so when 8:30, 9:30 comes, I'm not consumed with my actual work and I can focus on the charts. And then from there, my day plays different on how my performance is in the morning. If I traded good in the morning, that's great. By lunchtime, I'm done. I'll go have lunch, and then I'll finish the second half of my day focused on work, not only for that day, but then also seeing what work I can do to put myself in a position to not be as stressed or loaded with work on the next day. And then I come home. If I hadn't worked out in the morning, I'll go work out. If I already worked out in the morning, I'll come home, probably make myself a snack, and then I'll review charts. Then I'll make some dinner, and then I will do some stretching after dinner, and I'll usually read a book. When I'm going over those charts in the afternoon, I'm probably journaling, whatever it is, and then I read a book, and I go to bed. Carson, I have a question. I plan to go live within the next 6 months and trade with my own capital. Now everyone says you should risk 1% per trade, but but wouldn't it be wise to deposit, say, only 25% of the trading capital and risk 4% per trade? Suppose I had $100,000. That's something that you could do. Yeah, that's definitely a way you could look at it for sure. It's never a bad thing. Capital is capital, and I think you have to be an intentional risk taker. And so, with that being said, your risk and how you want to manage taking your risk is all on you, but there has to be intention behind it, right? And so, I risk 0.5% per trade. I don't even risk a full percent uh, per trade, but that's based on my capital, right? It's based on my intentions with my risk. Um, you know, I personally, this is all personal. I personally will have days where I might risk a full percent, and that might be chopped up in between 1 to 2 to 3 trades. Um, Really, I'm going into it with an overall risk on the day, right? What's my number in which I stop, right? So, a trade could be broken down into one trade. It could be one whole trade. It could be 2 trades throughout the session, and then one other trade in the afternoon. That could be 3 whole trades in the day. Overall, I'm going in. I'm going in, and I'm trying to stay under that risk parameter, no matter how many trades I put in that day. Yes, your money is technically safer in the bank. Do I trade prop? Yes, I do trade prop. I think prop firms are very, very, very useful, very good. They dug me out of whatever hole I put myself in throughout trading. Um, I think that they are manageable. Um, I think that they get you in the right mindset of thinking on how to trade. Do I want to trade prop firms forever? I don't know. I don't know. That's I'm not too worried too much about that. People ask me, um, people ask me, how long do you want to trade prop firms? I don't know. I'm only focused on my next trade. That's something that I don't need to worry about, right? It's not what thinking about that does nothing. Now, do I take percentage of my withdrawals and build them in a separate account? Yes. Now I'm not putting them physically in an account. I have a separate bank account and I put that in there. But when that reaches a certain level, then I'll put that into my own account with a broker and then trade from there. Um, yes, your capital is safer in the bank, but nowadays nothing is safe. You have to just realize that. So that's a personal preference. What's our or what is my recommended prop firm? I don't have any recommended prop firms. I'm not a ambassador for any of them. I have an FTMO account, 2 FTMO accounts, and that's it's the only thing I've ever known. It's the only thing I've ever done. I don't have any more. I haven't taken any other challenges, um, and I've had no problems with them. Um, and any minor problems, which they're not even problems, you'll get anywhere else, right? It's an industry that it just comes with. Sometimes you're going to get more slippage than you want. Sometimes you're going to get delayed executions, right? That's the truth. You have to realize there's not going to be any broker or any prop firm out there that's going to be perfect. Just the way the industry goes. So you just have to keep that in mind when you're looking into those things. Yes, I am strictly futures. Strictly futures. I will also try prop firms. My big problem is that I learned exclusively on TradingView and have very big difficulties with the ugly MetaTrader and the prop firms without time limit all work. So here's the thing. You ready? I This week I was unable to record my trades. Just couldn't do it. and I was trading on my iPad, right? And I have screenshots of my executions, not the screenshots where I'm still in the trade and whatever the case is, and I'm covering anything. I have the arrow executions on it, so you'll see it. I took 3 trades this week, right? One on Thursday, and 2 on Friday. One was a loss, 2 are wins. I was up 3.5% on the week. And you'll see it. And even when I was doing those trading reviews, I also would at the same time, um, would be pressing on my MetaTrader. And so you'll see my entries. I have screenshots of them, of my executions, of the arrows, of the candles that just arrow executions, so you can see the whole trade, where I got in, where I got out. I was only buying this week on S&P. And that's something that it's a hurdle you got to get over, right? Unless you want to trade something on T-Trader, or C Trader, excuse me, or Tradeovate. A platform's a platform. You got to learn how to use it, right? And it's just like learning anything else in life, right? There's resources that you can do, but utilize the resources. But then also the only way you're going to learn how to use the platform is by what? Right? Learning it. It's the same thing with trading. The only way you learn trading is, I could say you could sit on all of these calls throughout the entire year and not trade at all, and you wouldn't get anywhere, right? So that's a big factor that you have to think about, is just using it. You have to use it. You have to mess up on it, right? And that's why if you're not used to MetaTrader, don't take a challenge until you're comfortable with MetaTrader, right? I also have, if I don't use them as much anymore because they are hard to use, but I have MetaTrader on my computer too, although I'm at work and I don't have MetaTrader on my work computer. But when I'm trading here on MetaTrader on my at home computer, I have magic keys, right? And if you can read some of these, I know this is a little, right? If you can read some of these, I can enter and adjust and manage trades on this keyboard. If you guys have ever heard of magic keys. They are very hard to use, though, I will say. It is not an easy process, and I still am not very good with them. I don't really trust them as much as I just trust myself manually managing. But if it's something that you can get good at, that could help too. Um, 6 minutes, and I think people start hopping in. Dad, how we doing? Hello?
Good, good, brother. How are you today?
Pretty good. I accidentally started it at 9:30. I meant to be at 10 and I think I clicked 9:30 on Zoom. But we're
Yeah,
here. I hopped on and I was just answering some questions for um, Sebastian and Victor, and um, they were just asking me some stuff, but I'm just waiting until 10 really.
cool. I'll be back and forth. I'm just getting stuff ready for later, so I'll be watching. Love you, brother.
Sounds good. Love you too. I am excited to be back though. I am very excited to be back. I hope that for those of you guys, one second, I'm getting a phone call. One second. Sorry about that. But those of you guys that have been around, uh, I know I'll wait a little bit to get into most of it, but if you guys have been following, you know, what me and Henry have been talking about ES, I really do hope that it has guided you throughout these past couple weeks of price action on where price has been going. And and maybe it's not every little thing, but for the most part, where we've been looking for price to go, where it has gone, and where it has gone from, hopefully you guys have started to pick up on a little bit of stuff, um, seeing some stuff. And here's Mr. Henny coming in the chat. I accidentally started it at 9:30 because for some reason I think when I made the Zoom I made it thinking I made it for 10 and clicked 9:30 instead of 10, and so I got the alert on my phone, so I ran up here and at least just turned it on. But I've just been kind of chit-chatting right now. I've just been chit-chatting. We'll still give it 5 more minutes for people to hop in. I know we're coming off of a little 2 week hiatus, so I don't expect too many people to potentially hop in. Maybe some people forgot about me or forgot I was alive. But for the most part, it is recorded, and I know people go back and watch the recording. But Henny, how you doing? Long time no see.
Yeah, been a couple weeks. I'm good. I'm feeling good. Um, had a little bit of vacation time myself, so this was my first week back to the markets really, and
That's good.
yeah, just getting back into the flow of things.
I always, one of the best things I like about vacations is, for me at least, I always like, it's like a good reset because you work, you work hard, you work hard to the point in which you really like you just want to get away for a little bit. Then you get away, and while you're away, towards like the second half of being away from whatever it is, you kind of just get this drive again, right? It's like a little reset of like, all right, you know what? I got whatever I needed to out of my hair, and now I want to go back into it. I miss doing whatever the case is, um, and that's actually one of the best things I like about vacation and getting away from just work in general, trading in general, is because it always you can work so hard consistently for so long, and still you're not going to have, for the most part, that same exact drive as you had when you first were, not first starting, but you know we don't, as traders, we don't trade every single week of every single year, or I believe at least you shouldn't, right? It shouldn't be something that you are constantly, constantly doing. And when I mean trading, I don't necessarily mean looking at markets. I go the entire year with I look at the markets, but actually trading and going through the stress of managing trades and stuff like that, you want to have breaks here and there, and those breaks are good because when you step away, you can, you know, come back to equilibrium, get a little outside point of view of what you just went through, whether it's like performance or whatever, what you could do better, what you can continue to do well. But man, I love it's like a perfect reset because it's the only way you can really get away from it. Like that's the only way you can have a reset is to actually step away from it. Um, and personally, like, did you look at any charts while you were away, Henry?
Not at all.
Yeah. See, and that's the best part too is I used to not even do that. I would still go on vacation and I would look at stuff and I'm like, if I know I'm not going to trade, or I know I at least should not be trading, why am I even looking at it? You know what I mean? Like, why even look at it? Why even have it in my brain when I can just focus on enjoying the time and wherever I'm at? But that's great. Like, I'm glad you had Now, what would you say is better, North Carolina or South Carolina?
Oh, it was all fun. We went through a couple places. I really enjoyed the uh, Greenville area, Greenville, South Carolina.
Okay.
That city's really building up nice. They've got a natural waterfall like
Really?
right in the center of their downtown,
Dang.
which is
That's
really
cool.
cool.
Yeah,
Yeah.
the Carolinas and the waterfalls they're everywhere. Did you ever go? I've always wanted to go to Charlotte, North Carolina, because it's
Yeah,
a
I've
lot.
been to Charlotte.
It's
Charlotte's
been
a little bit more of a big city, but I think
yeah,
on the weekends a lot of people get out into
yeah.
it's kind of like a central point and there's a lot of cities around it.
I
Same
really
with like
liked.
the Asheville area.
Yeah, I really liked. Asheville's really cool. I have been there once. I really like the idea of Charlotte. One, it's financial district, so I'm a little biased there, but it's
Yeah.
cool because you have that. It's got a little bit of like a Chicago feel to it, but you're 30 minutes to an hour, and then you're in the mountains, and it's cool. So you get the best of both worlds pretty quickly.
Yeah. You get a little time off too?
Um, not really. I took one day off work. Well, it was a half day, and I went up to Jacksonville to go see a concert um, of a country artist that I liked. I don't know if any of you guys here are familiar with Zach Bryan. Maybe yes, maybe no. He's kind of
I think I'm
an
in.
oddball. But with regards to time off, no. Having time to myself, though, yes. I've been able to at least kind of um, pull more time in for myself. Haven't been doing as much. I did go kayaking yesterday. Um, been trying to do not as much Friday and Saturday night activities. I'll put it that way. I've been cutting away from a lot of the night activities, and just trying to get to bed by, you know, 10 on the nights, and that, at least get up and have energy and just get some stuff done. I've been trying to get some stuff done around my house, um, just straightening my environment. Working out, I've been working out a lot. Unfortunately for me, I have to diet very hard because I'm uh, naturally I have a high metabolism. It's not my fault. It's my dad's fault. But he has to deal with it too. But I have to eat a lot to gain weight. And weight is always something that I've been if there's anything that I've ever been somewhat self-conscious in, it's been my weight. Um, but it's funny because when you eat a lot, your body's constantly digesting food, so you're constantly tired. So I have to strategically approach how I do it. So I have to think about what I'm eating and what I'm consuming, times in which I'm consuming it, and how to offset my body always digesting it so I can have energy, because I mean we need energy. And it's a weird game to play, but I've been able to figure it out over the past year or so. I'm just kind of, the hardest part of anything is just starting it and getting through those first
Mhm.
couple weeks of hard. But
Let's
all
get
right,
you
so
getting back in the zone for this
yeah,
next few months.
and we've got a fun next 2 months. I will say that. All
Mhm.
right, so it is 10:06. I will go ahead. We can start talking. Um, one thing that came up, I know I like to mention stuff that comes up across things that I see on social media or something that I read in a book. Um, if you look at most of the if you look at most of the most successful people in the world, they have one characteristic that sticks along with them, like through across the entire thing. And there's several characteristics sometimes, but this one stood out to me. When you talk to, or if you've ever talked to someone that is very, very, very successful, um, or even if you've been in the room with them, or if maybe you know, maybe you don't, they usually are not egotistical at all, right? They don't have an ego, and ego is a big part in trading. And the reason why they are non-egotistical doesn't mean that they don't have an ego, but they're not egotistical, right? The reason why they're not egotistical is because they know what it took to get there, right? They know hard, right? They know how hard it was to get through certain things. How many of these little tiny small private victories that they had to do to just get a couple of public victories, right? What's a public victory? A watch, a car, a house, a couple houses, a plane, a boat, right? These big public victories you can count on maybe two hands. But how many private victories did that person have to go through that no one saw just to get a couple of those public victories now that everyone sees? And so they understand, these very successful people, they understand what hard feels like. And so when you sit there and you feel as if you have reached a point of complacency, right? Maybe you got a couple dollars in the bank, maybe you're starting to win a couple trades, starting to feel easy. That's when that ego creeps up, right? Because you are now comfortable. It's something that feels easy. And so in order to get rid of that, because you're going to have these waves of egotistical nature in trading, it's just natural, right? It is inevitable, right? You're going to, at some point throughout your journey, and hopefully continuously throughout your journey, make X amount of money in X amount of time, and it's going to make you feel some type of way. It's going to make you feel better than the person you were before. It's going to make you feel better than people around you because they're not doing it. They didn't make that amount of money in this amount of time. It's natural. It's inevitable. How do you swallow that? How do you subside that? Well, you fight harder opponents. It's the only thing you can do. You have to fight a harder opponent. You have to go to the next level. Well, how do you go to the next level? It could be a bigger lot size. It could be a bigger account. It could be a stricter discipline. It could be a stricter plan. It could be a higher percentage goal per week, right? I don't want you guys to, once you guys start getting good, good is just, it's, um, good is different across everyone's board, but good is good, right? And the second you get good is the second that ego is going to start talking to you. So you have to know, when I was going through my trading journey, I always kind of knew what that next opponent was going to be. So I knew when I reached that opponent and I felt as if I kind of defeated it, the second I felt that ego step in, I was like, okay, what's that next opponent? And I had that kind of written out, and I knew that there was kind of levels, whether it was lot sizes, whether it was account sizes, whether it was a weekly percentage goal. There was these things that I had kind of foreshadowed because I knew that I could feel it every time. It was almost so inevitable and so consistent that every single time that I reached a certain point in my trading, there was one common denominator throughout the entire thing, an ego, right? And when you have an ego, someone said this a while ago, ego stands for edging God out. And I'm not going to get religious. Everyone has their own religious beliefs. But whatever you believe in, the second you have that ego, you're now edging whatever that is that you kind of have faith in out, because now it's just all me. It's the me show. It's the I show. It's all me. Everything's on me. All I should be on me. And yes, you need to recognize growth, but recognizing growth and steps to success is very different than having an ego, because ego is the worst thing that can, it is going to be your biggest downfall. It's going to make you press that button more. It's going to make you press that button with a higher lot size than it should. But you always want to keep in the back of your head, what's your next opponent, right? Once you beat whatever current opponent you're on right now, you need to fight a harder opponent, because if not, you're going to get complacent, you're going to get comfortable, you're going to get an ego, and then you are going to be you're going to be your own detrimental downfall in your trading journey. That's the first thing that I wanted to kind of just open up with. And with that being said, let's talk some charts. I'm going to go ahead and start with DXY. Don't need that. Okay, so I have not touched this chart since the last time I talked to you guys. We were trading down in here, and I was talking about how our next 3 areas of buy-side liquidity, I assumed that most likely we probably were not going to take this yet once we had broken above this, right? This was the high in which I wanted to see hold to go lower. When we had gotten this up close candle through this high, I then kind of switched and said, look for the highs, right? And I just pointed these 3 out because those were the first 3 that were in the area. You can see price takes it. I also had mentioned this SIBI. I had also mentioned this SIBI, and I said price could most likely want to draw to that, right? You can see how that's where exactly price wanted to draw, because once price got there, it kind of slowed down a little. Yes, we went through it, and we went to the next SIBI, but notice how from where we went through all of these highs, where did we start to slow down at, right? That's price reading and balancing the sell side inefficiency, buy side imbalance. A couple other things too to note. If you look a little bit closer down from where we kind of pushed off from, you can see we had a BISI down here. So once we closed up here off this high, the next daily candle made down closure, which created a BISI. The very next day, we pulled into it a little bit below the consequent encroachment, pulled all the way back up, daily candle closed above it. That shows you bullish tendency. What else can you look at? If you look at this up close candle right here, right? If you can look at this up close candle right here, we have a low right here. We take out the low, we consolidate, we start to take out the high. There's displacement in here. There is some displacement in here. But notice how when price pulled out of it, we came back down in here and we used the very top half of this high to really push us into the SIBI. So that was something that hopefully you guys were maybe potentially looking at, watching in dollar. To me now, I still see the dollar. If you've noticed, we've gone higher on ES, and if you've noticed, we've gone higher on dollar, right? That should raise an idea to you that potentially that's a mixed market, right? In mixed market conditions, you need to be a little bit careful. But we knew what we were looking for on ES, and to me, sometimes when it's in that area and it's so sometimes clear to me on where ES is going to go, I know that the dollar can get mixed, so I don't weigh as heavy on dollar. Okay, that might be like, whoa, Carson, what do you mean? You have to kind of know where and when to hold weight on certain things. But when something is like glaring at you, which has been like this buy-side liquidity, which we've been talking about and Henry will cover on ES, when something is glaring at you, and then the other thing it's supposed to counter correlate with, that's not glaring. Sometimes you have to just take it with a grain of salt, know where to weigh your options, and hold your weight to your considerations. And nothing was screaming that this thing was going to go lower either, so I kind of knew it was going to go higher. So a part of me assumed that we were going to be in a mixed market, right? I assumed that we could potentially just go in tandem with each other, even though that's not what it usually does, and that can offer low probability setups, yes, but also focus on what is at hand, and that was ES going into buy-side liquidity. So as of right now, I'm a little curious on where we want to go. I'm going to delete all this for a second. make it a little simple. I still am going to be watching this breaker overall um, to see if price wants to actually use it as support. Um, in a in a perfect world, price is most likely probably wanting to draw into that volume imbalance up here. So you can see we have a volume imbalance and then around 102.5. If I pull a fib from this low to this high, right, bringing us to equilibrium is right inside that breaker. And if I actually pull an extension and I start seeing where we're extending from, right, this is a higher time frame swing point right here, right? You can see this right here, right? This is a higher time frame swing point, right? That's a higher time frame swing point. So I want to look at my projections from here to here, right? It's this last leg that Michael teaches us. You draw to see the extension. Look where the -2 puts me. Coincidence? You can tell me. So I am bullish for the most part on dollar, and I think that ES isn't. I don't think it's quite done with its run higher, but I think what will happen is you will see ES. You'll see ES make a high and start going lower in the next week or so. And what you'll do is you'll see dollar continuously going higher. And I think it'll take this at a later date, maybe later in the year. Now, like I said, take that with a grain of salt. On a daily, where else? Well, you have an order block right here. You've got an order block right there, right? Watch the threshold of this down close candle. You've got a little volume imbalance in here. You've got BISI in here. You still have a BISI in here that wasn't quite filled. I don't think it will get below this breaker, but it's something that potentially I would watch. I would look out for. I think if we do get back above this candle right here, if we get back above 104.5, I think we can definitely run to the volume imbalance. And then obviously, I know we were talking about it a while ago, but we didn't quite get it, and that was 106, right? Keep 106 in your eyesights too. Yes, this is very clear, but I remember talking about it. Remember, the higher this goes up, right? The higher that goes up, the more money or the more confidence is built around this idea of supporting, right? So that has to go up just to a certain extent. Note the BISI right here too. And then what does that do? It could go down, right? Price wants to, the narrative wants to say support, 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 support. This is a super easy, clear double bottom. But if you look a little bit closer, it could go higher. Why? Because it did take out a little bit of liquidity. There was liquidity that was purged on this low right here. That's the market buying it time to leave sell side. Go and run buy side, fill what it needs to. But still, people who don't know how to look at it, just at a glance, at full glance, it's a double bottom, right? It's equal lows, but they're not exactly equal lows because this low is a little bit lower, which means you have a breaker in liquidity there for intermediate term push higher. So keep that in mind. Not gonna, nothing too crazy, nothing too complex here about any of this stuff. It's pretty simple. I don't have, if there's anything else I would say is study some inversions, right? So look at all of the SIBIs that we went through on the way back, right? Look at all of these and study the inversion of them as you see price playing out throughout the weeks, right? Look at the candle body closure there. See the candle body respect inside this, right? So if we were to get back above this BISI, right? If we can get back above this, potentially see something like that, right? So Um, you know, I don't really have a very good invalidation point yet. Besides potentially, obviously, if I think if we can get below this breaker, then I obviously think we will take the lows. But you know, more importantly, my main focus is from this low to this high. Do we even get back into discount, and how do we respect and if we go higher? Right? That's something that I'm potentially looking at too. And that's to say we can even get back in there. That's where, and I can pass it off to Henry. That's when you start to look at, you know, you've got a volume imbalance in here too. That's when you need to start to see, okay, when does ES look like it could potentially start to turn around, right? When does it look like it's going to make that high? When does it break that structure? Because now, if in my head I'm thinking that the dollar is going to continue going higher, I need to start looking for a potential high to be made in ES in the coming weeks. That's when I can start to see where price might make a low in here, an intermediate low somewhere in here to then push it back up there. Because it's not just going to keep going straight up. I mean, it could, but it's going to have some form of retracement down into some form of discount and then go higher. And I think that when that happens, you will start to see ES make that high and go lower. Then you get away from that mixed market. Does that make sense, guys? All good there? I haven't really checked chat. So hold on. Yeah, we're good on chat. So yeah, that's it for dollar for the most part. That's kind of my take on it. Penny, you want ES?
Yeah, I agree on that. So many.
I think. Oh, I gotta. Yeah, I gotta get. Yeah. I think someone's knocking on my door. I'll be right back, guys.
Okay. Yeah, so this is what we've been talking about the last few weeks, or we weren't on the last 2 weeks, but prior to that, we were looking at these equal highs, relative equal highs of the buy side, and now we've delivered to that. And then just looking up above that to the nearest inefficiency, just this volume imbalance up here. We can see on the weekly chart as well. I did hear in one of Michael's last videos there that he was saying not, and we talked about this in a previous one of our meetings as well, whether to utilize the continuous chart to see a clearer vision of this information. And he said not to use that. So I actually went and looked at that, just the June contract instead, which does still similarly align with the continuous chart. This low right here, this candle is basically right where that volume imbalance is, that 305 area. So we've still got a little bit of room up to that candle's low. But looking at this, I would just want to see where price continues to next. There isn't anything in this order flow that's indicating to me yet that high has been put in on ES. So now I'm just looking to where is the next area that price could continue to, and also what has been left behind that could possibly be returned to. Right, so we have this weekly volume balance that's right here. We will watch if price returns into that. How does it react? Does it stay in the top half or the principal encroachment and then use it as a support idea to continue trading higher? Or is it closed below and then used as an inversion idea? And then we could start considering if a top is potentially put in. Otherwise, I'm just looking to see how price continues higher. So watching this low as the next target. And then looking up to the body of this candle here in the weekly chart, and then apply that candle there. And notice here how this is inside of a SIBI as well. We previously reached up and then traded lower off that SIBI. We can watch that in the weekly chart. And note the constant encroachment in it as well. That should take a little bit of time to get up here. If this is going to trade above these highs, we could potentially see more of a low resistance liquidity line from here up into here. But we'll have to see how this forms over the next week because of the mixed sort of market between US and dollar. I mean, NASDAQ's been running on there like crazy as well. So we'll see how price trades up into this low, see how this area responds, and then look for this area next that we do start trading up a bit higher into it. Beyond that, if we somehow do reach one here, then I'm just looking for the next inefficiency. So I'm looking for constant push when we split, looking for this volume imbalance here. And I don't know if we'll go this high. I don't want to say anything that far out, but that would be nice if it does. And if you go down into the daily, you can kind of just look at what took place over the last couple of weeks. So we traded down into this here right here. We had noted this breaker as well, which we traded just a little bit below. But notice the immediate response. Just trading away, just into this here and then immediately going. This was for this entire March through almost through May. This is like daily high resistance seeking destroy conditions. Right? See how the highs are being purged here, and then the lows are being purged, and the highs are being purged, and then the lows are being purged. This is tricky conditions to trade in. So I noticed that a lot of people on Twitter saying they're having difficulty when trading in this range, and that's okay if you did too. You wouldn't want to trade in this on a 1 minute chart, so it's understandable how it would be challenging seeing this trade on a daily chart. And you have to treat your trades differently when this kind of action is taking place. Either you walk away entirely, or you have to look at it as a scalping move. Right? You're not looking to catch these large expensive moves. Maybe you're going for your 5 or 10 hands in the But we trade down here into this pissy, then come back up, consolidate here, consolidate this pissy right here. Each of these candles copying in this last down first candle here, the pledge sell side, and then making the final run up above high side target here, reaching into this high. Then one last time coming down into here, trading just to the low and then back out. So we rebalanced this here, and then trading right into the buy side target that we done. So if you look on your daily chart, you can see a couple of inefficiencies in here. We can look for price to trade to. Here and here, just like that. So now we're just going to be looking to see how price responds when we trade up into these areas. And then watching any inefficiencies that are created for that. So volume balance here, and this case here. Yeah. The way I like to look at these charts is this is our expansion, consolidation, and expansion. So now what we can look to see next is continued expansion, and then consolidation, and then potentially expansion, and maybe a reversal off of a premium array, or just continued extension. But we have to see what develops when price trades into these areas, especially on the higher time frame chart. Just because this ran above buy side, I'm not immediately thinking that it's going to go back and trade into these lowest greater these. So now I'm just looking for what's happening when we trade into premium. How far are we trading into it? Are we just going into the low of it? Are we going into the constant approach at 5? Are we closing above it? And we can look for conversion models if we're trading above and closing above a premium area, then you can look for it to be inverted. price to, where's that? Utilize it. Price continues to take the trade out. Right? Or you could see that maybe it responds this way. Like this. And that will give us a different idea. So we can something like that. Like you got to shift the market structure back lower, and then start using premium arrays as a resistance idea to turn back on. So nothing is bearish about the order flow yet. So I'm going to continue looking for higher prices. But now that we've extended pretty far up into a premium and added this consolidation and purge buy side, this is where we at least want to start looking for a potential turning point. But we're not trying to, I don't try and catch the tops and bottoms. I just try and determine where the turning point is. And then you participate in the meat of the move. You don't need to pick the top and be a seller. Any other questions on that? Let's see. Monday, 23rd, May 22nd is your weekly break. Monday, May 23rd. On a weekly, Monday, May. Oh, on a daily here, please. Yeah, you can look at that. We had it on the weekly. I guess you could consider that. I don't really see it on the weekly here, or it's just not as clear to identify because you don't have 3 candles forming that swing point for a low, high, low, low. If you look on the daily, you can kind of see a breaker in the potential. Oh, 2022. Right here. Yeah, I guess we could use that. I think it's a little far back to reference as a PD array that I would really utilize to trade off of, because it's outside of that 60-day IFTA range. But you could reference that. I don't think I would use it immediately in seeing what's occurring right here. I would want to use more local recent PD arrays. But I do see that low high very well. Any other questions here?
I think we're good. That's
Hi,
great.
Henry.
Oh, yeah,
Henry.
we got one. We got one.
Quick question. So you don't see any reason for being bearish at this point, right?
Not yet.
Not
Like
yet.
I said, I'm not trying to call a top on this. There's no reason to do that, especially as an intraday trader. So nothing about the order flow yet is bearish. I wait for the order flow to show me that it's bearish before I try and get involved as a short seller. To me, all that's happening here is this is continuing to use discount arrays as support. It's inverting premium arrays, and then it's trading higher into buy side. So until it starts like negating discount arrays, like if you have a BISTI and it trades below and closes through it, or a volume imbalance like this and trades below and closes through it, or trades through some important buy side and then has a shift in market structure lower, that's when I would start looking for potential bearish order flow. But until then, I'm just looking for continued trading higher or consolidation.
Michael referenced that at this time of the year, we should be looking at an SMT on a higher time frame to see whether that's going to change or not.
Mhm.
What are you paying attention to that or not really with this
Yeah.
bullish order flow?
Yeah, I'm following the other markets as well. We can take a look at NASDAQ. But I mean, again, here, nothing. This is I think this is the high that we referenced on yesterday from August 2022. Let me see. Yeah, it is. So this would be an SMT already between NASDAQ and ES, but it's I don't want to consider that yet necessarily because nothing has indicated yet that this is ready to turn back lower. And so this can just be catch up in a sense too, right? Like NASDAQ has already purged this high, ES can just go and purge this high. So then you wouldn't have an SMT in case.
So what will be considered on ES? What will basically, I mean, we just noticed that NQ took the buy side and made a new high. ES did not. So in theory, so in theory, that's an SMT. But you're saying, so basically, since the ES order flow is so bullish, you don't consider that SMT. So what will be how? I mean, when will you consider that SMT being correct? And I mean, what will have to happen on ES in order for you to?
I would want to see price trade back through a discount rate that I would expect to support price to trade higher.
All right, so you'll be bearish basically if we were to close completely that weekly imbalance, volume imbalance.
That would turn the tables for me. So I would start looking to identify those signatures in price that show that order flow is bearish. So then you'd want to see premium arrays acting as you'd expect them, like SIBIs trading up into SIBI on the intraday and then beginning to trade lower.
Okay.
Yeah, I think if ES doesn't take that high and you start to see NQ fall off, and like you said, that's ES closes through that volume imbalance like that. That's where I think you'll start to see that failure swing in ES, which would create that SMT between NQ. Because NQ already took it, so let's say NQ starts falling off, and let's see ES starts following, and it starts following NQ prior to taking that high. That's where that SMT kicks in.
Yeah.
Now we have the big catalyst next week, which is FOMC. So, I mean, that's basically whether we go 3% because through 4,400 it's only 3%. So
yeah,
if they don't change rates that week, we can easily do that.
Yep.
Yeah, we could definitely see a run up in the year.
Leslie asked what the weekly profile was. I have it on my screen unless you want to go over it.
Oh yeah, go ahead.
Okay. I just figured I'd save you the time.
Any other questions on this before I close this out? Thanks, Mauricio. Thanks, Luis. All right, we'll give it to question.
Okay, so the weekly profile this week was a Wednesday or midweek reversal. So you have Monday's price action, consolidated. Tuesday's price action, making a high, aka creating the draw of liquidity for the week. Right? Tuesday makes a high but doesn't make a higher high, creating buy side liquidity. It then declines into Wednesday. Wednesday morning, we make a low, pull up, no structure break. Thursday comes in, we Judas lower to turtle soup off of this internal low. If this low holds, you have to see it hold. Breaks through structure here, right? And then obviously kind of carried away into it and kind of more just spooled throughout the rest of the week. So you've got Monday, Tuesday, Wednesday. Seeing if Wednesday makes a low, you only know until Thursday goes and tests the low. We test the low on Thursday. Do we go lower? No. After you see this big candle, you could start to now see or potentially expect higher prices going into the end of the week. So midweek reversal, Wednesday reversal was the profile this week. Biggest takeaways here is the draw on liquidity, right? And where did this low form in the market, right? Where did Wednesday create the low? Well, one, it created it in the morning, but then two, there's a BISI right here, right? And if you take that BISI and you look at the the behavior of the candle closure, no candle closure here, right? Swing point, low, lower low, higher low. Then it just kind of consolidates. You have a Judas lower, right? Consolidation, manipulation, expansion. So that was kind of the profile for this week. Biggest takeaway is the draw on liquidity, right? Right? The draw on liquidity, you need to be expecting higher pricing, so you should be looking for bullish templates, right? And know what it's doing each day, right? Monday has a very small range day. Tuesday drives higher but does not take any structure with it, only engineering liquidity. It then goes lower, right? Tuesday's low, was it formed anywhere? Nope. Was it inside of BISI? Nope. We go into Wednesday. Wednesday comes in, has a little kind of hiccup higher, but just into this inefficiency. Did not break any highs in here or anything. Also, time of day is key. So, it's early, a little too early. Comes down into it, 10, 11 o'clock, makes that lunch hour turnaround, and then it just stands still, consolidates. Thursday comes, 6, 7 o'clock, you get that drive lower. Where do we make the low? 9 o'clock, 9:30 equities open, we go higher. With the idea that this could potentially hold being a Wednesday reversal, right? Why is it a reversal? Because what did we do the entire first half of the week? We went lower. Wednesday hits, that was when we started going higher. Even though we didn't directly start going higher on Wednesday, we made the low on Wednesday. So lower on, Tuesday engineers the high, the draw, you go lower, midweek, you reverse and go higher and take the draw. Hopefully that makes sense. And so with that being said, I will go into some of my trade reviews. So like I said, I did not have time this week to record trades. It just was busy. And I'm just kind of getting all of my stuff ready, and I'm not as too worried right now. I'm being selfish when I say this. I'm very in tune trying to get detailed in on myself. But I was able to record because I'm not always trading on TradingView. I trade on MetaTrader too. Like I showed people earlier, I have an iPad that I execute off of. So I went to conceptualized 2 for 3. So 3 trades, 2 wins, 1 loss. These were my trades on Wednesday. So I had this is technically 1 trade, but 2 trades on Wednesday. So you can see I bought down in here, partial, terminus. Okay, that's 1 Wednesday, and I'll go in on the charts and do it, but I'll just click through all of them right now. So that was Wednesday's. So this is on a 5-minute, right? This is on a 5-minute. Zoomed out on a 1-minute. This is what it looked like. So I bought in right here. Notice how my entries aren't the best. I want you to look at how the some of these entries throughout the week are very good, some are not very good, right? The entry does not matter. So I can tell you right now, when I entered in on both of these, my stop loss was at this low, right? It's a little bit of a wider stop than usual, but it protected me. I knew after taking this low, I just knew that this low to me was my point. There was nothing in here that I could fully see. You can see we have a little triple bottom in here on a 1 minute. So I wanted to save myself from something like this, right? Where this price action, right? That saved me. My stop loss was here, and then I moved my stop once we got up into here, actually, and went break even once I took my first partial. There was a 5-minute SIBI that I took my first partial in here, and then there was relative equal highs up here that I took out right there. Right, so that was my first trade on Wednesday. Thursday, right here, I was late to the party on this one. There was a better entry down here, and I'll go over it too. I was too busy. I was away. I didn't catch it. I adapted. I got in right before the move really went. Don't pay attention to these times, by the way. MetaTrader is just different. I was able to basically go in here. I was expecting this down closure to be an order block. So stops were at this low right here. Price can just kind of consolidated, finally went higher. And then obviously I had both trades. Well, no, one trade taken out right here. First partial. Second trade right here. Taken out. Right? Next trade. Well, those are both trades zoomed out on a 5-minute. Right? So here are the trades on Wednesday. Notice these were the trades on Thursday. The best entry that you could have gotten and the most ideal entry was down here, and I'll explain that one. I missed it. Notice how I was late to the party, but I still got a piece of the cake, right? I didn't get the whole thing, but I adapted, I adjusted, and I did what I needed to do. I found an entry model that I could kind of tie into, and I played it, right? Notice how it's not the best entry in the world, but I caught 5-10 handles, right? I think I caught 10 handles and 20 handles. From there, Friday, that's actually just the same trade zoomed out on the 1 minute on Thursday. Same trade. All right, so Friday, I'm buying in here, and I took out right here, right? That was my loss. So I had buy here, small stop loss, hit. This is a 1 minute. Bought here, small stop loss, hit right here. I bought again right here with half the risk. Stop loss got hit right here. I was a little impatient on these because there was a breaker that I was playing that I wanted to play, but I didn't think it would return to, which it actually ended up doing. I went in with quarter risk, right? Risk, half risk, quarter risk. Last time. This is my last line of defense, right? That's how I trade. I'll trade with full risk, half risk, quarter risk. If quarter risk doesn't work out, I'm done. That's my day, right? From there, notice where I entered in. Yes, great entry, right? Better than all the other entries that I've had all week. Notice how I was quick to take profit right here. Because what am I doing? What did this do? It's mitigating some of this, right? Because now I'm not in the mindset of trying to make money. I'm in the mindset of trying to mitigate loss. So notice how I didn't let it go anywhere before I knew that I needed to mitigate loss, right? And then I let the other trade hold. And my take profit was just at this high. My original take profit was higher, and yes, it would have hit, but this right here caused me to have a terminus of this, which required me to then now cover all loss and profit, and still profit, without trying to overstretch my boundaries. Alrighty? So now I'll go into the chart and I'll show you guys each day what I was looking for. But note that I'm not always going to be on trading view, but I'm still applying that same things in MetaTrader, right? You're dealing with funded accounts, stuff like this. I'm still doing the same stuff. I don't record it or anything but the executions are still there. It's still the same thing that you've seen on videos hundreds of times. Wouldn't say hundreds of times because I've only showed 20 plus of them, but you've seen them. Will I still record trades? Yes, when I can and I feel comfortable and I have the time. If not, sometimes you're just going to be able to, sometimes this is the best I can do, right? And you can still see, I still take losses. Loss right here. And then I'm buying in this BISI with this low right here, expecting this order block to hold. It doesn't. What's below me? A breaker with sell side liquidity over here, and you'll see it last time, right? Sometimes it's like that. So let's go into the chart. Wednesday was the 31st. Yes. Wednesday the 31st. Alrighty. So let me make sure I get my bearing straight. Okay, I gotta look it up. Okay. Alright, so down in here, this is where I was buying. So, right, price takes this low. To me, this low is secured now. If we're gonna go higher, right? I was buying in here. I was actually more so buying with the idea that after we had taken this low in here, I was buying on this up closure, right? First trade, I was buying on this up closure. Then, as we started playing around.
Carson, we need to share screen.
Oh, thank you. Thank you. Where's my Zoom thing? Oh. The amount of times I've done that. Alright, can y'all see it? Hold on, it's popping up. Okay, can y'all see it?
Yeah, you're good.
Good.
Okay, alright, so when I came into the market, this was more so midday lunch day. I usually don't trade lunch days, but I was not leaving my office, so I more so was okay with trading it. So I also had the weekly profile in kind of intact. As a matter of fact, this candle right here was the entire low of the week. So this was that Wednesday low that we had saw. So I knew where we were on higher time frames, but price came in and kind of took out this low. So I thought this low was going to hold, but either way, my stop was down here. Started buying in on this up closure, and then I thought that this candle would have acted as an order block. So throughout the entirety of the time, I bought in through on this up closure, and then when price came back down into this area, I was buying again. We kind of hung out, and the only thing that kept me in this trade was patience, because I kept my stop here until I knew, because on a 5-minute, I don't want to lose my spot, but on a 5-minute, there's a SIBI in here. So I knew that until we pulled up to that SIBI, I was just going to keep my stop there, and then I would have moved it up. So in most cases, this is a very low resistance or high resistance liquidity run, because you can see it's just chop, 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 chop. Then it goes higher. In most cases, people would move their stop here when they see this run. I was a little bit more patient because I was waiting for somewhere to fill up here. That's what saved me from this. In most cases, if you move it too quick, you're going to get caught right there. So it was kind of just a really simple trade. I knew that we were potentially going to go higher. I also was looking at this as a breaker, but this wasn't as confident of a breaker, even though we have a low, take low, high, take out the low, take out the high. There just was no displacement. That's the only thing that I wasn't too confident in on the breaker, was just that there was no displacement. But a breaker is still a breaker. It doesn't always need displacement with it, right? It just needs a low, a high to take out the low, and then to take out the high. And that's what we did. So even though we didn't have displacement, we still used the entirety of the zone as what? Support to go higher. So that was Wednesday's trade. And like I said, I took it to a 5-minute Sibi in here. And then I actually, instead of taking it, which saved me, instead of taking it to this high, notice how I wouldn't have got it. I took it to the start of the rejection block. So my take profit was actually the start of the rejection block. And you can see that that eventually hit. So that was, actually no, I did not. I take that back. I was looking at that, but I did not actually take that to the rejection block. I took it to these. I took it to the relative equal highs, excuse me. I just looked over at my screenshot of my execution. I was looking at this, and this still would have been a good thing to play. But I remember that I was running out of time. I wasn't going to hold it past or near market close. So I saw the relative equal highs up here, easy draw on liquidity, and I played that. So those were Wednesday's trades. Thursday, this is where I said that I had to adapt because I missed a really good trade entry and missed probably half the trade, right? So we're in the AM session. Very clear breaker. Very clear breaker. How is it very clear? We have a low, a high, we take out the low, then we take out the high. And if you click through on time frames, oh, that's why I didn't want to click through on time frames. But there is displacement on like a 2-minute or a 3-minute. But you can see low, high, we take out the low, we take out the high, we retrace all the way back into the breaker. And even if you get the consequent encroachment of the breaker, right there, look at that respect of the candle bodies in here. I would be buying all in here if I was there. Obviously that's hindsight. That would have been the best entry for the day. And then you had clear relative equal highs up here that you could have played to. Notice where your -4 extension leads. Your -4 extension is just above these relative equal highs. That would have been a great play for, that would have been 20 handles in 15 minutes. That would have been an excellent play. I didn't get that. I actually didn't start looking at it until that was already there, right? So all this happened. I still was expecting higher prices. What do? Well, notice how this took out a low. Notice how we had just taken out the high. So what I did was I used kind of this up closure right here as a breaker, right? I used this up closure in here as a breaker. You can look at it. It'll be one specific candle on like a 15-minute or a 5-minute. So when we came back down into this area, if I look at the consequent encroachment of it, look at the candle body respect. So when price is pulling back up into here, I'm already buying. I bought once in here, and then I bought another one down in here once we tested the breaker again with my stop loss at this low, right? And we pull all the way up into, I was playing these highs. I was playing those highs, and I was playing these highs. I think I was playing these highs. So relative equal highs in here, relative equal highs right here. Right? This was my trade from here, right? I caught this. if I would have been able to get in there earlier, I could have caught in this. Does it matter? No. Doesn't matter at all. Right? It's just price is price. Right? I got what I could get out of it. I don't need to think about how much I could have gotten or how much I would have gotten. I got what I got. So that was that trade. And I can even, I'll look at it on 5 and 15 minutes for y'all. And then Friday's trade, NFP is right here. NFP, right? Let that play without you. And then there's a couple things here. So after NFP, we created this BISI. Extend that out in time. But then also, what else do we have? We also have a breaker. Right? We've got a low, a high. We take out the low, then we take out the high with displacement. What else is there? Well, you could have potentially caught this ride up right here. And that's where my losses actually incurred because I didn't think we were going to come back down in here. But looking at it in hindsight, this is relative equal lows right here. So there's sell side. There is a BISI, there is a breaker, and there is more, there's a volume imbalance right here, volume imbalance right here, there's displacement right here. So it's still a viable area to come back and reclaim, especially on a day like NFP. But I got a little impatient as a trader, and I started buying in here. I had one entry in here with my stop very tight in there, and it got hit. And then I started playing this. I started buying in here with my stop here, and it got hit. And then my last chance was what I had originally wanted, right? If I was just patient, I would have not had to deal with these first two losses. But I'm not perfect, and neither are you, and you're going to have the same exact thing happen. So price takes out these relative equal lows, reclaims this BISI, revisits this breaker. That's where you saw that entry down here on Friday. Where was my first partial? The first area I thought I could go that would actually mitigate loss, which was, let me delete some of this. Right? So after going up into here, I saw this, right? Took my first partial here, and then took the rest of the trade out at the high, right here. If I would have been more patient and not taken these two trades, it's all hindsight, and let price go to where I originally thought it could go, I would not have taken that partial. This would have been my first partial. And I would have potentially been able to gain this high, potentially this high in here, right? My mistakes cost me potential future profit. I know that. That's just me have to get better. What do I have to do? I got to be a little bit more patient, right? Got to just be a little bit more patient. But I did what I was supposed to do following a loss, right? I did that. I used full risk, which looking back in it, Carson, there's not a trade model in here. So even if you did trade, why are you using full risk? I'll note it. Won't happen again. Right? So from there, I had to use half risk in here. And then from there, I had to use a quarter risk in here. Overall, I was still able to gain 3.5% on the week. But I can do better. Any questions on my trades throughout the week? I know it's a lot easier to have the video and have everything go on there. If I go into a 5-minute too, you guys can see really quick. So on Thursday, this was that breaker. There was that breaker inside. That would have been the most ideal entry down in here. I missed it. I didn't get in until up here. So I was using this up closure. I was using this up closure to guide me on that buy. Wednesday, that's where I was in all this chop. Remember I told you there was a 5-minute SIBI that I took my first partial. It was right here. And then on Friday, you have NFP, and you could have very clear seen this is where I got chopped up on this big BISI, but right below it, you have this alongside an order block. Price just comes down and revisits it one more time. I thought this low was going to hold, even though I saw all of this potentially filling. Impatience got me on Friday. Was still able to recover and get profit. So 3.5% this past week. Yeah, that leads me to my next thing, but I'll wait. Henry, do you want to share anything that you might have done this week? I know you had a trade before that too.
Yeah, I've got a couple I can show. I'll just show the two things. This one was on Thursday. Let's see. Question. Yeah, okay. Yeah, this was on NASDAQ on Thursday. So it still had the bullish bias. The buy side hadn't really met yet that I was looking for.
Real quick, Ismail had his hand up.
Oh, go ahead, Ismail.
I was gonna have a couple of questions for Carson regarding his trades. If you want me to wait till you go after your trades, I can.
We can take it right now.
Yeah, I can take it really quick. What's going on?
All right. So on the Friday trade.
Okay, here I'll start with just the executions, and then I'll go back to the charts. Okay, Friday's trade.
Yeah, Friday's trade. I just want to point it out. It's like I want to thank you so much for like doing this, because I was literally looking at that turtle soup. I was like in my head, I was like, I know Carson is buying that low and getting in after. It's just the model that you've been using and you've been showing us is just starting to really click and see it. I thought it was going to happen at the open to clear out these equal lows. Then that was going to be my entry, but it didn't happen. I just kept waiting. And after that, I got into the silver bullet. But I would like you to go to Wednesday and just go through what are you watching on the higher time frame, because I was also looking at the weekly profile and we fully rebalanced the daily BISI. What other things are you looking at that indicating to you that, okay, this low after we fully rebalanced the BISI and we ran sell side one more time, what are you looking at a higher time frame to give you the confidence that that's probably going to be the low of the week?
Yeah. So one thing that did help was just in general, it was just being bullish. Like there has not been too much of a thought of me wanting to press the sell button. So that does help. But I will say on a higher time frame, actually on a daily, it really was kind of the deal for me. I saw that on a daily, you see how we had this BISI, and I think you were just talking about it. We had fully filled it, right? So that was the main thing, is when I saw this fully get filled right there, and when you go into a 4-hour, it doesn't look like everything got filled here. But on the daily, I know in my head it's still filled. Okay. 4-hour, that's fine. Let me go ahead and on this BISI, let me see if it was able to get to the consequent encroachment of it. Okay, was not able to get to the consequent encroachment of it. That's fine. That just means it's more bullish. Now on a 1 hour, when I go to the same, so notice how I'm utilizing this one piece of price action because I know that the daily filled. So I'm looking to see if there's anything that's going to tell me, are we going to go lower? Are we going to go higher? And what's going to tell me that? It's all on the consequent encroachment of it. How is it behaving on the consequent encroachment? So now that I go to a 1 hour, I'm looking at the consequent encroachment of this one. Okay, here. We were able to now hit the consequent encroachment 3 times and still have very clean 1 hour closure above this. And it was not until, it was basically like, it was like right as this candle was closing. So right as this candle's closing, I'm now like on a 15-minute. As we're coming down into the closure of like the 11 o'clock candle, I note that one, we did take out a low in here, right there. That little low right there was taken out. And notice how this down closure right here doesn't have a wick at the end of it. We open, we wick down, and we go higher. And now we're closed. Now we closed. Look at the consequent encroachment. Notice how we closed on the consequent encroachment above it. So looking at all this stuff on like a 15-minute, I'm now starting to sit here and think, okay, odds are I'm getting the idea that it's going to hold. Do I know that it's going to hold for the week? No. Do I know that this right here, this candle on a 15-minute time frame is going to be the low of the week? No. I'm just thinking in the near term, with regards to session and intra-session, I'm thinking that we have a low. So now when I go into a 5-minute, as price is kind of making its way up, and I think I'm a little too ahead of myself as I'm kind of going back, but once this down closure hits right here, I'm really looking at this 5-minute on a 1-minute. So I'm going to take this line right here. I'm going to take this line right here. And I'm going to take the mean threshold of the entire candle, which happens to be what? The consequent
Hourly.
Yep, the consequent encroachment of the hourly. So I know that in my head. I know that the mean threshold of the 5-minute order block that we're kind of playing in, kind of pushing out of, is just the consequent encroachment of the hourly. So now when I go into a 1 hour, I'm utilizing also, or I'm not a 1 hour, a 1 minute. Now when I go into 1 minute, I'm like, what 1 minute characteristics can I use? Because there's nothing in here, right? There's nothing, there's nothing, there's nothing, there's nothing, there's nothing, there's nothing. Now I can start to see something kind of play, and it's really only this breaker. But I'm also a little skeptical of the breaker because there is no displacement. But going back to this 5-minute, right? This is that top half of the 5-minute, right? That's the wick of that 5-minute down closure, right? We're looking at this down closure right here. So we've got the top and the closure. And as we're playing in and around all these things, sometimes I'd like to buy on the down closure. Sometimes I don't get to it. But I'm just trying to buy in and around this area. And I had a relatively larger stop than usual just because I didn't feel comfortable placing my stop anywhere else besides this low. That was the only thing that kept me really in the trade without that last whiplash down before we went higher. It was just because there was nothing in the chart that really made me feel comfortable. Could I have put it here? Yes. Somewhere down here? Yes. But at that point as a trader, I'm mature enough to just place it at the low. Because it could have just absolutely done like something like this and then gone higher and just left this for whenever we do become bearish in order flow. And so I just kind of felt safe in the fact of just doing like a 5-6 handle stop loss. That's really what saves me in there because I didn't feel comfortable placing it underneath the breaker because it wasn't a clear breaker to me, just because I really want to see displacement. So in most cases, I'd really like to stick the stop loss under the breaker. But my gut feeling said, well, we have a BISI right here, so I can't place it under the breaker because price could come back and revisit that. Could I have placed it right here in hindsight? Yes. But I think, it was my first trade of the week. Wanted to make sure it had room to breathe. And then when I bring this up, hold on. And I think that that's when you see, I don't know. And so like when I bring up this, that's where you can see this, right? Like these entries aren't that good. This one was a little bit better. This is me buying thinking that the move is gone, buying on up closure, which isn't something you want to do, but it's not the worst thing in the world. But then down here, it gave me a little bit better of an entry. Now that's me buying on down closure. That's me looking into this breaker now. That's me actually utilizing the breaker. This first entry was me seeing it play originally off the breaker. And then the second one was me having it get another shot at the breaker. Buying actually in down closure. But if I would have put my stop loss below that breaker, right, that would have hit. That would have got triggered. So that saved me. And also, if you can remember, there's a BISI right there. I just circled it on my chart. I'll go back to it too. So seeing this right here caused me to be cognizant of the fact that we could throw a wick down in there. Did I know it was going to do that? No, it's just more experience than anything. But then when you start to play it out, I'm still confident that we're going to go higher. Why? Because we still have a clear draw, right? But I can't move my stop loss yet. And this entire time, I'm just waiting. I'm just waiting. Still haven't taken the draw. Also, do notice the candle closure based off this 5 minute. So in my head, I'm still thinking that these lows can hold. But just because I think that they hold, doesn't necessarily equal me moving my stop to it. Because I'm not as confident as these lows holding as I am this low holding, to the point in which I want to risk my trade and put it under. Because the draw is still open. Or at least the immediate draw. So this entire time, even as we're going in this chop, I'm still thinking in my head, the draw is still open. The draw is still open. Now we're just playing here. I'll extend this out. Now it takes that immediate draw, comes all the way back down into this, and in some cases, actually, I probably would have moved that into there. The one thing that has been saving me that I've been doing more recently than not, and it has been saving me, is and instead of having this, because my entry wasn't as good and it was 5 handles. If you want to play 5 handles, great. I have been only really going to break even until my first partial. So even though there's points in price in which I feel as if I might want to move to break even, I'm letting my trade breathe extra and I'm being more patient until I take that first partial. And really the only thing that's been triggering me to move my stop loss to break even is that first partial. And so because I didn't take this partial and my first partial was like up here, I didn't move it yet. Now, I will say, once we did this and we started pushing back up, I went ahead because now the immediate draw is gone, right? We took the immediate draw. We did kind of displace a little bit lower. So once I saw this get filled, I went ahead and bumped my stop right here. Because at that point now I'm like, if I am going to be wrong, it showed me that it could potentially go lower. I'm not going to just completely throw the trade away, but I'm at least going to take at least some of that risk away. And then that low ended up holding and we went higher. Hopefully that makes sense.
It does, and the understanding of that you're letting it breathe out, and you understand the fact that it's gonna be lunchtime after an expansion in the AM session. It's just gonna chop people around, but you're just marrying the idea and you're accepting the risk. Is there's so much in this trade, even though it's probably the lesser as of like gains. I think that was impressive. But thanks for sharing that.
Thank you, I appreciate it. Henny, you're on.
Okey-dokey. Okay, everybody can see.
You're good.
Cool. This is NASDAQ on Thursday. And so here we have the 9:30 open. This is where a lot of people can get tricked if you're not paying attention to higher time frame bias. Because what's happening here right at the open? Well, we have a high, a low, higher high, and that's purge right here. And then right at 9:30, it runs up into a breaker, which hits right there. So you could take that trade and short that down into sell side. But this is not a trade that's going to continue following through because the higher time frame bias is bullish. So this happens, and then I'm watching for a reversal to occur after sell side is taken right here in the 15-minute. And now I'm looking for these equal highs here on the hourly chart. And then I'm also paying attention to what we have here, which is the new week opening gap from this week. So there we go. I'm switching to the micro contract right there. So I'm just getting back into the flow of things here. And that's where I take my entry, right? We've got a low, a high, a low, a low. So I'm paying attention to this breaker and also noting that we have a BISI right here. My stop is a little bit tight here, just not wanting it to trade all the way back into the low. So I take my entry there, right as we trade back into the breaker. And I'm looking for equal highs and the buy side that I marked out. And then here, I get stopped out. In reality, stop placement should likely have been under this candle low here. But then you see what happens here. It trades to the low, stays inside the BISI, and exits back out the high. Now this is a balanced price range. So as soon as this trades back into it, my bias hasn't changed. This hasn't shown me anything that this is going to trade back into the low. So now I'm still expecting these highs and buy side to trade. So right as this trades back into the balanced price range right there, I'm re-entering the position. And now I'm expecting this low to not trade. Because what happened here? This rebalance, this re-delivered this inefficiency, and then it was rebalanced here. So now I'm not expecting this to trade.
I'm noting on your 15-minute in the bottom left-hand corner, that wick right there. Note how that consequent encroachment is being respected.
Yep.
It's something that you could
Good to know as well. So using that as a discount, right? And then trading higher off here. So right as it trades back into here, I am re-entering with the same bias that I had before, looking for buy side, and my stop is going under the slope. You can see it does get a little close there, but does not go to it. So to push higher, now I'm noting this is another pyramid opportunity right there. So there's a small BISI that's left. So that could be your entry there. And now notice my stop. It moved to here. It moves just up a little bit. So I'm just, as this is getting close to my target, I'm not going to break even yet, but I'm starting to reduce my stop just a little. Then I take my first partial through the equal highs and then go to break even. Now we had a 10 o'clock news, which trades just down into this BISI right here, and one more run higher. Into the down close candle there. and then another partial taken. I'm reducing my stop more. And now I'm noting this breaker, low, high, lower, low, and traded through the high. And just looking for the next buy side target above here. Another 2-minute order block there, and that was the last line of defense there, that volume imbalance. So I get stopped out right there, and now I've mitigated this loss and found profits for that. Into the next trade here. So those are the first two that I took before. This trades down, leaves these equal lows, and doesn't show any willingness to continue trading lower. Trade back above right here. What's happening here, right? We have a SIBI. If you draw that out, this trades above, closes above it here, and then look at the inversion of the SIBI, also inside this SIBI right here. Because of these equal lows, I was a bit hesitant to be a buyer immediately right here, because this could have swiped this and then continued higher. So what I did instead is waited for this to trade. This candle here touches exactly that high right there, that down close candle. So now this is redelivering it, trading back away. So this BISI is rebalanced. And so what can I do again? It's the same idea as before here. Right when this trades back into this area, I can be a buyer and just put my stop right here. I'm also using this candle here as a mitigation block. So we have a low, a high, a higher low, and then it trades above. So I'm using this as mitigation. And if you look on a different time frame, like a 2-minute or a 3-minute, for example, you'll see this price swing here, likely as a down close candle, which you can identify as your order block. So I'm buying there. That's going to stop here. Now I'm just expecting to see this breaker trading right through. I'm noting that I'm going to take 3/5 of my position off there. Right when I take the partial, that's when my stop goes to break even. And now I'm noting bullish signs continue as price does not even return to fair value. So look at all these fair value gaps here, 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 all being created, and price continues to run with no regard for reaching back into these. That's a bullish sign to me, that it's not even getting a chance. That's going to run quickly as a low resistance liquidity run up in the buy side. So that's where I take my next partial. And then my final exit is at the low of the new week opening gap. There we go. So then this continues to run higher all day long, but that's fine with me because I got my piece right here and I don't need to catch the whole day. I like to talk about it a lot. I think I put it in my tweet from this past week. My goal in trading has always been to get my time back. So for me, that doesn't mean being in front of the charts for hours and hours and hours every single day. So I'm happy with this piece. I'm more than content with that, right? This was a from 1040-ish to 1040, 1050-ish. So that's a 10-minute trade. I can be in and out, and then I'm done. And what I do, I can enjoy the rest of my day. So that's that trade. Any questions on that one? I've got one more issue. Can't see the chat. I'll go to the next one then. Then this was ES on Friday. So here's that 42.44. Oh, any indication from the London on NASDAQ? Well, it looked like London was just consolidation. So out of consolidation, we can expect that expansion. And what we see is this is the consolidation. And where's the annotate? Here. And then the lows are purged of London right here. right? So we have this accumulation, your manipulation lower, and then we can look for the distribution higher. And if you look at that on an hourly chart, then you can target those equal highs, high side here, and the week opening gap, high side here, equal highs here. And then this is where we reach to, I don't think we got here on Thursday, but on Friday, reaching up into here. Yeah, so you can pay attention to that AMD and look how that's occurring between not only intraday, but between your sessions, right? Like if London session is accumulation and you're expecting higher prices to trade, then you could expect that potentially the lows of London could be purged before running to your targets higher. Typically, you'd see that the New York session will follow suit of the London session if it's expansion. Like if London is expanding higher, you would likely see the New York session continue to expand unless London has already reached the higher time frame PD rate. That's when you could expect like New York AM reversal and trade back in the opposite direction. Okay, all right. Friday, that was the buy side target that we were talking about, those equal highs on the daily and the weekly chart, 42, 44. So that had already been reached prior to NFP. And then you can see on NFP right here, this is the news release here, trades right back down into a very random level here, the midnight open, and just below the weekly opening price, and into the high of the current new week opening gap. It's below the sell side, runs out the buy side, and then trades back into this last down close candle here is your order block. Then begins to trade higher off of that. So here we start making that run higher. Here you can see price trade above and close above this CIBI. That's your inversion model right there. You can take that long right there. Again, it happens here, trades above here, above this CIBI, just into the last down close candle and a tiny BISI right there. And then trades up into this CIBI here. It leaves a little BISI behind right here, which I'm taking my entry on. I'm taking just for one contract here because this is our, if I'm looking at this dealing range, I'm buying in a premium at this point. I would have liked to be a buyer here and here, but I didn't get to that. And so now I'm buying in a premium where my risk is a little bit higher and I'm not as confident in this making that immediate run. So I want to be a participant here because it could easily make this run just tapping into the SPICY and then running up to the buy side where I expect, but I'm sizing myself accordingly. This begins to trade above a little bit, just into the high of the CIBI, and then reverses off of there. And I get stopped out right there. Again, I'm still expecting this idea to occur, right? The higher time frame bias is bullish. I just didn't have a timing right here. So we come back in, trade lower through here, trade up into the CIBI, back lower, and then into this inversion CIBI again, if you draw that out. Then displace higher right here. We've got this low, high, lower low, and then trading higher, so that can be your breaker. And we've also left a small BISI right there and right there. I'm entering as price drops down into this BISI. And here, really, I should have only taken one contract here, considering that I took the loss. So in hindsight, I should have taken half the risk, but my stop loss was a bit smaller on this trade. And I had greater confidence in this trade because of the price action that I developed. Really, I should have just taken one, but I sized two into this position, which gives me an opportunity to partial out. see the candle bodies closing inside the breaker and just the wick dipping down into this buy side imbalance. And now I want to see a close above the city, which turned price before. So I'm taking my partial there for 5 handles, stop goes to break even after the partial. And now I want to see this inverted. Running the volume imbalance there, see how the candles are trading into it or closing above it. And now I'm noting the last premium rate, which is this order block. And I'm only expecting it to be a speed bump. Now I'm reducing my stop up below the inversion city. And then go through the high. That's where I take my turns.
We have the same take profit.
Yeah. So, this was not this, not it was on Thursday actually right here. This trade was the early entry on ES as well, right? That occurred right here. I wanted that one on ES, but missed that one and was taking it and missed that too. So, but this is becoming a model that I like to trade a lot, especially if you're seeing intraday potential, you know, like an early potential sign of a bearish move. Like if this trades down in here, but you have a higher time frame bullish bias, a lot of people may be thinking that, well, right here we have city. I'm going to take this short and look for these lows. I don't want that. I want to see this be inverted. And then as a result, I'm okay with not immediately being a buyer, right? I'm okay with not, like here, for example, I'm okay with not buying it right here. I'll wait for it to trade away from it. And then I'll be the buyer on the first down close candle back into the area. And then I'll just put my stop there. Because now I'm getting confirmation of that bullish order flow. Any questions on these ones? Okay.
Alrighty, so I do have to leave at 12. I've got my grandfather's birthday lunch. But what I'm gonna do is I'm gonna share with you guys because I want you guys to kind of get somewhat familiar with quarter theory. And I'm gonna show you someone on Twitter who has a very good place to start looking into stuff because like Henry had said, you know, you should be trading to get your time back. It's the biggest thing. But what I'll do, since I don't really have time to go into it, I'm gonna try to get with Henry maybe later this afternoon or tomorrow afternoon. We'll make a video on it and then send it out to the group. But Day is really good with, you know, he's been kind of on this stuff for a while. What everything in the market is in the quarters, right? 1 year has four quarters. 1 month has 4 weeks. 1 day has 4 sessions, and one session has 4 90-minute cycles in it. And I think when you can understand that and really piece that down and view that for what it is, you can start to understand how important all quarters are, but more so how quarter one of anything, not just the year, but it could be the first week, not the first quarter of the year, but not only the first quarter of the week, but not only the first quarter of the day, but also the first quarter of the session, is set up for the second and third quarter of the year, of the week, of the day, of the session, and see how that kind of plays. So if you guys don't follow Trader Day, I would definitely follow him and look into the things that he talks about and how everything is kind of cut into fours, because it'll start to really dial you in to price. That's probably not price, excuse me, time. Time is like the biggest thing. Not only is it important to know attached to price, but you have to kind of know when and why you want to press the button, and you want to make sure that you're in the right thing. So like for me, if you guys are out there trying to go get funded or anything like that, take note that the second and third week of the month are the best months to trade. First week you have NFP. The same way I like to use Monday as a preface for the entire week is the same way I like to use the first week. Now, do I trade on the first week of the month? Yeah. But I utilize that first week of the month the same way I do like a Monday for the week, right? How does that first week play out to then lead a narrative to quarter 2 or quarter 3? I meant the second week and the third week. And then the fourth week you have close. If you also note too, second week or the second week of every month, you've got FOMC, and the third week of every month, you've got CPI. First week you have NFP, and then that fourth week, depending on the month, obviously, it's kind of whatever. So I would definitely look into Day's stuff. He definitely talks a lot about it. But I'll try to make a video on it, both yearly, monthly, weekly, daily, and by session, and show you. And I want you guys to go potentially research it for yourself and see where you see these things line up, especially with these like 10 to 15 to 20 minute macros inside of these things, and where they lined up in the 90-minute cycles, and see where you start to see these turnarounds, where you see highs form, where you see lows form, where you see liquidity taken. This stuff is key when you're really trying to figure out where and why whatever your life is like, whatever job you have, whatever your time schedule is like, you can figure out a way and a will to trade whatever time you want based on this type of stuff. Maybe you can't trade New York. Maybe you can't trade London. Maybe you can only trade Asian. That's okay. There's a way to trade all of it. And some are better than others, but that's also not an excuse to say that you can't find a way to get it done. So that's something that I'm gonna try to put out for you guys. I just don't unfortunately have the time today to do it, but I'll make my own, and Henry also, if he wants to get in on it too. We'll make a video for you guys. It'll be maybe 30 minutes long, maybe an hour long, for y'all to sit there and just kind of dive into it, bite off what you want from it, but also do your own research on it, right? Really start to dial in on time and know that there is these cycles that price plays with, not only on a yearly time frame, but on a monthly time frame, not only on a monthly time frame, but on a weekly time frame, and not only on a weekly time frame, but a daily time frame, and also not only on a daily time frame, but on a session time frame. And you can build this insanely precise picture on where and why price is going to certain areas, why price is accumulating at this time, why it's manipulating at this time, why it's distributing at this time, but not also that, how long it's accumulating, how long it's manipulating, how long it's distributing. And so you can start to know when your threshold of getting in the market is, right? Maybe there's one specific 90-minute cycle on one specific day on one specific week that just you dial in on. And that's the trade in which you trade with 2%. You might risk 0.5% every trade, but you've studied that much and you have enough data and you've practiced it enough to where when that week hits on that month, on that day, on that session, on that 90-minute cycle, you'll risk 2%. And it's that's your little secret thing, right? Takes a lot of back testing, but could definitely pay off. These are the things that it takes the most time to go back and back test, but also can potentially have the biggest eye openers. I'll go back to that, but I will really quick show you guys. I forgot to show you guys the news calendar for this week. So just to get you guys on par for what's going to potentially unfold this week, there's not a whole lot, right? You've got, am I on the right one? Yeah. So you've got ISM services PMI on Monday. Do I have those? Hold on. I need to filter this. Yeah. Okay, this is all we have. We have unemployment claims on Thursday at 8:30, and we have ISM services PMI on Monday at 10. So not a whole lot of news going on.
There's a bit more on Wednesday as well.
I was gonna say, isn't there FOMC?
Um,
Or is that
The following week.
following week, but there's the I mean, it's not a huge mover, but there's a petroleum report on Wednesday at 10:30 where you can normally see a bit of a spike from there.
Oh yeah, that's when they're talking about crude oil inventories.
Uh,
So yeah,
yeah, those factors.
sometimes Forex Factory won't give you everything, and sometimes you gotta filter in the light ones. I like to keep the light ones away, just because it can fog everything up. But yeah, there isn't a whole lot of news this week. There is some. Play it how you want. It doesn't necessarily mean it'll be a bad week to trade. Just study it. Study what a week without a whole lot of news is like. I definitely would say probably Thursday would be potentially the best day to trade, just because uh, well, one, I don't trade Mondays, but you could potentially find a trade area on Mondays. But Thursday, could potentially start to at least find the volatility to kind of fill most of the weekly range. Or Thursday, yeah, Thursday will probably be the day in which you find most of the weekly range being filled. Um, but other than that, I will leave this last 15 minutes for anyone um, that wants to maybe ask questions.
Sure.
Yeah.
Carson, can you repeat what do you do the first week of the month? So basically the first week of the month is to see where we're heading or how.
Yeah, so I use the first week of the month the same way I would use like a Monday. So I like to see what high and low forms on Monday, and I like to see how that's going to be manipulated throughout the week based on what's above or below that higher and low that forms on Monday, and then from there, what higher time frames are around that, what arrays are around that, and what's that narrative, what's that higher time frame order flow, and that's what I do on Mondays, and I guide myself into Tuesday, Wednesday, Thursday, essentially Friday, to see what that narrative plays and how we play in and around those highs and lows. Same thing with the first week of the month. I'll take that weekly candle. That first week of the month, I'll take that weekly candle, and then from there, I will see what higher on the weekly time frame, what arrays are above that weekly high, what arrays are above that weekly low, what's our bullish order flow, and how could we potentially manipulate that. So I utilize that previous week, and if we're bullish and we kind of have a small candle on the weekly, and it's the first week of the month, I'm expecting to look to see if on that previous week's low, on that weekly low, if there's a discount array right below us, I'm going to automatically expect the first half of that second week, we're going to go run for that previous week's low. Take it.
Do you mind sharing the screen with the
Yeah.
with that example? So like.
Yeah, I got you. Weekly time frame. This was, let's go right here. Weekly time frame. Weekly low, previous week's low. Very next week, we take out that low, and then we start going higher. What else is around us on this area? Well, we have a volume imbalance right here. And we also have a SIBI that we could have been inverting. Right? SIBI anywhere in here, whether you want to call it here or here, either way. So that's one example where you have the first week opening. Even though this isn't a small range week, it still is the first week of the month. And there is higher time frames here. And for whatever reason, if you were bullish, that's an area in which you could have seen that. Another example. Let me find another.
For example, the current week that is a bullish candle.
Yep.
That one. So you will mark the low, the high, right?
Yep. And
I
also I always look at the equilibrium too. For this example, since this week actually this wouldn't necessarily be the first week of the month. This would be the last week of May. But what I would do is either way, it still plays. I would mark the high, I would mark the low, and I would also mark the equilibrium of it. And if I'm bullish, I would want to expect price to trade into a discount. See if there's an array there. Is there? Well, there's a volume imbalance. And then I would want to see it go higher. I would also view this wick, if this weekly candle has somewhat, at least half of the entire candle makes a wick, I would also take the wick and I would look at the consequent encroachment of it. No, I can look in a second though. So I would take the consequent encroachment of these, or of this wick right here, and the quarter of it, and I would look to see if when price pulls down into it, that's where I would sit there and I would look to see on lower time frames if we find some form of buy model, and then I would go higher. I wouldn't technically expect this low to be taken because I am bullish. But even it doesn't always have to be also with the first week of the month too. It's also very small weeks. So you can see like on for this example, these small weeks right here, where it's just like small. Odds are it's going to be very thin on how it plays with regards to the highs and the lows. You can see how it just kind of nicks some of these highs in here. I also noticed this. See how this previous week's high, you extend that all the way out. Look how sensitive we
Oh
were
yeah,
there.
yeah, 4180.
So just noting the highs and lows, and then kind of keeping in mind where you are. Are you in the first week, second week, third week of the month? Because if you haven't gone, like let's say first week plays out, you know, let's say first week plays. Let me get this brush on. Let's just say, you know, throughout the month you're just kind of like consolidating, and then next thing you know you're on the last week of the month. There's always a monthly range, just like there is a weekly range. So if you haven't gone anywhere, if price is just kind of hanging out and it's just kind of consolidating the first 2-3 weeks of the month, by the time you get to that fourth week, expect something to happen, whether you continue going lower or you do this, something like this. Always know that there's always some range that has to be, there's always got to be a range that has to be filled. So if you're approaching the tail end of a day or a week or a month or even a year, and there's not a range in which you have seen that you're expecting to be filled, expect volatility, like expect expansion. That's something that has helped me a lot too, is like I'm looking for this specific draw on liquidity relative to this time frame, and we're on the second half of the burner of that time frame, second half of the week, second half of the month, second half of the year, second half of the day, and we haven't gotten to that liquidity yet. I'm expecting expansion soon. It's like I've got it on a timer. I know that it's almost 80-90% of the time has to go and fill that want, that need, that inefficiency, that liquidity. But I'll make an in-depth video on it, and I'll go and grab a couple examples on a couple different charts of areas where the first half of the week, the last half of the or the first week, the last week. You know, I like to think that most of the times the directional moves happen in the middle of the times. So that quarter 2, quarter 3. That's why Tuesday, Wednesday, Thursday are really good days to trade, because it's in the middle of the week. You've got most of that direction playing there. That's why the second and third week I really like, because a lot of the meat of the bone is, you know, occurring in that middle half of the month. And that's also why I like June and July. It's because it's starting that middle part of the year. And same thing with September and October. September, October, June, and July are, like, to me, the best times of the year to trade. People would think August, but August is actually not good. It's the first 3 weeks of August are one of the worst weeks to trade. That's something that I just learned from Michael, and I tested it too, and you can kind of just see that it's very lackluster, choppy, high resistance, seek and destroy. But June and July and September and October offer the meat of the entire year for the most part. And to say that happens every year, no, everything is different, but that's for the most part like the gist of what that whole topic would be about, is understanding how price wants to move in quarters. Henry, you got anything to add?
That's it from me.
Does anyone have any other questions? I will make sure to post the recording, as well as I'll do my own little, and if Henry wants to, we'll go and grab some examples and do an in-depth study on it. I would stay longer, but I do have to go to my grandpa's birthday lunch.
Thank you, guys.
but yeah, ask, I'll leave it the floor for 5 more minutes if anyone does have any other questions or concerns. I am ears. I do have a couple more minutes.
No, so basically the conclusion is we're still in a bearish order flow. Maybe if we see some discounts, a raise this Monday, that will be a good opportunity to go long. But there is nothing bearish on as of right now,
Nope.
unless we take the prior week's low, right?
Yeah, if you can start to see the previous week's low align with, if you see ES start to take lows and close below that volume imbalance, and us with that, NQ fall and DXY really start to go higher, and that correlation kind of starts to crack, and you don't see that mixed market anymore, then yeah, I'm gonna start to sit there and view premium arrays as they should be respected rather than collapsed and inverted. So yeah, that's definitely that's on par of what I'm looking for.
Okay, thank you guys.
Not a problem. Alrighty, looks like everyone's good. All is well. Well, I will make sure to get that video to you guys. I will make sure to get that this recording posted to y'all. Have a great week trading. Have a safe week trading. And I will be on the lookout. I will try to post some stuff on Twitter this week as well. Took last week off, like you guys know, but other than that, I will be in the loop. And you guys feel free to reach out to me if you guys need me or Henry. Let me
Yep,
know.
likewise. Stay safe. Take care, everybody.
Talk to y'all later.